The $1.40 zone has worked like a charm, and the asset is experiencing its anticipated bounce despite the slightly lower downturn the asset faced during yesterday's session. Let's review the play to have a true edge over the direction potentials in the coming week. Welcome back to the channel on this happy Friday. This is ARCa. Let's dive into ticker symbol AZ. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol AZ. So, okay, what we're looking at here is the 12-hour chart. The reason why we're looking at the 12-hour chart is because if you remember here from the last thread of analysis, we spoke about this formation being a 12-hour formation, right? And just to put some clarity here, the daily formation is this right here, right? The descending broadening wedge on a daily time frame. This would be our I guess our macro perspective, right, versus the shorter time frame with a very similar time frame. The only difference we're using the reason why we're using the 12 hours is because it can see the after hours and post and pre-market, right? So it's important for us to take a gander at this. So notice here that, what was it, 2 days ago where we supported from this $1.40 zone for quite some time until it finally failed towards the end of the session. And then it recovered pretty nicely, and it used that $1.40. The price action ended up using that $1.40 as a nice area for a bounce. We did anticipate that by the fact that we drew them here, right? Just to remind everybody what we were doing, right? We were expecting price action to bounce from these zones here, right? Here's another bounce where price action kind of exploded to the top side, right? And we did have a few other iterations that we took account of, right? So sorry about that. Usually keep this consistent, right? There we go. So yeah, we had 3 other iterations back here too, from where we experienced bounces from that $1.40 zone. So it's a very important area, and I do think that it's in all essence a point of inflection, right? So let's go ahead and now touch down on the closing is 158, right? So let's touch down on the daily basis though, because you're going to notice that this regression here, which is the larger time frame descending broadening wedge, is going to shift ever so slightly, right? So let's go ahead and do that. And this is now what it's looking like, right? So the candle actually on the daily time frame came right back down perfectly to touch down on this regression, just like all of these prior iterations, right? All of these that are testing it, right? Just like that, and bounced towards that upside. Now, please remember that the take profit, or actually, I'm sorry, the resistance that we're about to face on this asset is actually located at about 170. It should be 178, actually, not 177. So let's just go ahead and adjust that ever so slightly. There we go. So yeah, this would be the bottom of the resistance being the top side of the wedge. Right now, just to elaborate here, we have a top side target of $2.69 by taking a trend line right from the top side of the formation to the very bottom side of the formation. So that was assuming that we would get a breakout today, right? So we in fact didn't. There could be a resistance touch into Monday or Tuesday, and we shall see then, right? So if this is ever so slightly adjusting, let's kind of push it here to Tuesday. And or the end of the session on Monday, right? And then let's see what that looks like. Okay, so it's still fairly similar, right? We had $2.69. So now we can go ahead and just adjust it to $2.73. Okay, so just in case we end up breaking out at the tail end of Monday's session. Okay, so we'll keep that there. Remember that this is just a price objective based on a supposed area of breakout. It's not proven yet. There's no way I can know when we're going to do that or if we're going to do that. But what we can do is actually look at the play, look at price action, and continue onwards and forwards, right? So let's now move on to the next chart here and take a look at the Gaussian bands, right? So the mid band here is located at about 160, but that's not really what I'm focusing in on, right? What I am focusing in on is the top side of the Gaussian band, which would be essentially $1.82. So now going back to the prior chart, $1.82 lands right in between these targets here, right? So now what we do is put down something that I usually tend to call myself as a focus target. Okay, so from this point, now we have a range of 178 to 192 with a focus of 182. Okay, so that's very similar to what we did on this range over here, right? So we ended up getting this total range of 250 to 283 with a focus of around 265 to 273. So this now is kind of tightening or honing in into a target to try to gain some type of accuracy, right? It's for no reason other than my own personal OCD, right? So you can you can consider it that if you jive with that, right? So now let's go ahead and move on to the next chart here, as I do believe that this is a good continuation, as we do have now, we have 4 8-hour iterations closing inside of the Gaussian bands, but in particular, we have 2 in a row now that are closing entirely with a clean close inside of the bands. Okay, so that's incredibly important for us to denote, right? So now let's move on to the next chart here and take a look at the volatility bands, aka Bollinger Bands, right? So this is actually my personal script. I scripted it just so that it can display the mean here, and I also can adjust the standard deviations away from the mean. So in this case, I have the bands set to a standard deviation of 3, the multiplier from the mean, so that can give us the bottom side target and the top side targets as well. I'm still in the process of getting this script perfected, right? Like, for example, my sell signals, they're pretty okay, but the recovery signals are what I'm working on right now for the long strategy within this. And also I'm going to be adding the labels here to the standard deviation multiplier outside of the volatility bands, right? So that's pretty much what I'm looking at here at 150 with a close on a daily. And it looks like we actually expanded into the mean as well. So pretty damn perfect that we did that. Now, I know that this is, you're probably going to ask, well, ARCa, this is the back test that you were talking about that had an upside of I don't know how many different standard deviations that you calculated, right? Well, yes, this still does have that signal. And I would like to remind you of how I took, for example, let me get rid of the bands here. How I gave you this example here, to where, despite the fact that price action dropped to these levels here, it's still reached a total 20% gainer, right? So it's the criteria plus the upside that's most important, despite the price action, right? So very, very well could be happening right now, right? Just like this, it happens more often than not, right? Many of these iterations actually do have a downside before they continue on to the upside. Here's another one, right? We have a firing of the signal right over here. It actually fails, then continues on to a higher high. And if we look back, then many of the other ones do too, right? It's never a perfect upside, right? It's going to have to vary. It's just because price action might as well be in mathematical terms. I don't want to say a random walk. I would actually like to say more chaotic. But within chaos, there is structure. And unlike volume, though, where volume really does actually, that would be, yeah, you know what? Volume would be more of a random walk. And then following that, price action would actually be more of a Brownian motion, right? So where you're actually bouncing off of like little dust particles, right? So forget it, guys. It's just I'm giving you mathematical nerd stuff here that I tend to think of a lot, and yeah. But anyway, so yes, we still have. This is a way that you can tell that we still have the upside here on stochastics. So let's just kind of manipulate the D%, which is the 3-day exponential moving average, aka the yellow trend line here. And the smoothing factor, right? So let's go ahead and do that to exponential period of 9, and putting in a smoothing factor of 9. So you can actually see here that with a 9-day exponential moving period of look back, period look back of 9, you actually have an upside pivot even still. So looking back further, right? So now if we did this, for example, on a 1-day look back with a smoothing factor of 1, we actually have an upside here too, right? So there is some consistency to what's happening here with the firing of the signal towards the upside. I personally like to leave this just as a period of 3 with a SMA 14, being EMA 3 versus SMA 14 for the stochastic read. But sometimes I just want to catch an earlier read or an overall read as to where price action may be headed to. Okay, so yeah, we still have some targets to realize, the smallest of which could be the standard deviation, which is landing within the 68% of the distribution chart right here. And that would be a move that's 16.08%, otherwise known as $1.92. So $1.92 does rhyme pretty nicely here, right? We already have it jotted down right up here. It has a lot to do with the top side of this candle here being a top side of 190. And it rhymes very well with a lot of things. So let's just go ahead and focus in on, first of all, getting the potential of 178 to 182 first, and then we can actually continue on the upside targets. I'd like to just provide for you a huge, just one enormous thread of analysis. But I also know that there could be slight confusions there. So please know that there is also the SMA 200 on the 3-hour time frame, and that SMA 200 is landing at $1.78. And as you can see here, $1.78 is absolutely the top resistance of our 12-hour formation. So lots of confluence there, and also a very expected pullback from that zone, right? So as soon as we reach that 178 cent zone, there's no reason why the price action wouldn't pull back to maybe 170 to the space of about 167. We will go ahead and take a look at that as it happens, right? So now moving on to the last part of the analysis here is going to be the RSI, right? So this is the 30-minute immediate short-term time frame with an upside pivot. It's getting very close to the gravitational zone here, or in fact, let me see. It's wow, it's 0.06% away from the gravitational zone, which would then send price action to the upside. So I mean, that's close enough. Upside pivot on that SMA 14 and supports have been found at it, right? So now the bi-hourly time frame. Okay, good. So upside pivot here, and it's outside of the gravitational zone, so it doesn't have any real danger for a downside other than technical pullbacks. This does, however, actually, let me see. It's slightly outside, 0.4% outside of the gravitational zone, but if it does have that danger to the downside, then, we still have the SMA 14 below us to support before a continuation. Same situation here with the 8-hour time frame. No need to go over that. Same situation with a 12-hour time frame. And now the daily time frame has not read the jump to $1.58 upon the after hours price action, right? So this is very likely already beyond the gravitational zone or deeper within it with an upside pivot even still. So now that we're getting the daily time frame on Monday, we're going to see the reaction based on the post-market price action, right? So as long as we do have this upside pivot here, and the upside pivot's bleeding or cascading from the shorter time frames into the larger ones, that's going to start shifting the probabilities for the buy daily is already getting that upside, right? So more into the 3-day time frame, right, and then into the 5-day time frame. So I think those are the only time frames that are now kind of waiting for the influence from the shorter time frames. It would just be the 3-day and 5-day, seeing that the buy daily already has an upside pivot. So we're looking pretty good, team. I do see some resistances coming back. The probabilities of hitting that $1.78 target on Monday are, I would say, likely, but we have to be patient with this, right? It's better for us to just have the price action do what it's going to do in a balanced manner, instead of just experiencing this huge FOMO event, and then it's just going to capitulate just as fast. So it's better for the price action to really take its time and close, specific areas and mark down new supports as it makes its way up, so that when it does come back, it has a valid area to sit on before continuing to an upside, right? So let's just make sure that we can practice some patience, team. You know the targets, the resistances and supports, and the potential risks here, team. So if any questions, go ahead and reach out to me at my Discord or on Twitter. and make sure to give TZ, the Trader Zero, follow, right? Because he is the person that brought this ticker up to light, and he is the founder of Investor Ignite. So thank you so much, my brother, for having me take a look at this. I am incredibly humbled, and I hope that the community can benefit from this play. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, never. I do need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well, a very, very good weekend, and I shall catch you at the bell on Monday. Adios, team.